Hello everyone and welcome to your Glassnode video update for week 14, 2022. So we have seen a fairly historic period of accumulation, particularly across the course of this month for Bitcoin. And this is actually quite an interesting time to actually study who is doing the accumulation, what kind of information we can divulge from the on-chain information. And you may have seen there's been a number of public buyers, things like the Lunar Foundation Guard and MacroStrategy, all announcing or actually executing on large-scale bids. And what we're seeing is this kind of narrative and this structure of Bitcoin being a pristine collateral coming back into the foreground. It's a narrative that we saw through the first part of 2021. And really what we're looking at here is how we can characterize the real accumulation that we can see and try and unpick it to understand who is exactly participating. So alongside the 19 millionth Bitcoin being mined this week, we've started to see these large public buyers sparking that interest back into Bitcoin as a pristine collateral, an asset that can be moved anywhere in the world and retains that level of scarcity. And that becomes ever more present as we get closer and closer to that 21 million supply cap. So what we're going to look at here is we're almost going to step through the concept of accumulation. What exactly is it? How can we identify it on chain? And what are the different metrics that we can use to really build up conviction as to not only is it occurring, but who are the actual parties who are involved? So we're going to start with the observations of outflows from exchanges that are occurring. We're then going to move into a period of looking at the actual accumulation state, how much of this coin volume is actually being accumulated. And then we're going to break it down and look at things like the shrimps, which are those that we classify under 1 BTC. We're going to look at whales that have over 1,000 BTC. And then some of the more specific entities like the Lunar Foundation, WBTC demand, which is another one of these lockup systems for Bitcoin, and also ETF flows that we're seeing in Canada. So as always, please do give us a share and a subscribe before you get started with this. It really does help the channel get more likes and attention. And I do look forward to seeing you in the next one. So as I said in the intro, we're starting here with our overall accumulation state and price metrics. And we can see here that we're establishing this somewhat of an uptrend. We have broken somewhat to the north side, but we are still in that period of trying to get momentum. So we're certainly not out of the woods. And given that we've had two 50% corrections, it is prudent to just pay attention to what kind of market state we're in. So right now we do have a little bit of upside, but we need to see that follow through. And that's really where we can follow up with some of these on-chain metrics to fully understand what is going on. So we can see on our trend accumulation score metric that we have had a number of weeks of these higher purple colors. Now remember, for this metric, when it trades closer to a value of 1, that's signaling that we do have stronger accumulation. We saw this through the first part of this correction in November into all the way through down to January. And we've seen quite some accumulation going on, values around 0.65, 0.7, 0.75 over the course of the last couple of weeks. So what this is really signaling is there has been net balance change. And remember this, the way that this metric is constructed is it looks at the overall participants. Are they whales or lots of shrimp? And overall, are they adding a significant amount to their balance? If they only have 1 BTC, but they're adding another 0.5, then that's a significant growth. Whereas if they're a whale with 1,000 BTC and they're adding 0.1 BTC, that would register as a very small color, what we see here in these yellows. So we know that there is some level of accumulation going on. It's something that we can now pay attention to and start diving into the data to understand exactly what the characteristics of this is. So this is a great time to actually start with the very big picture. We're going to look at exchange balances first because they give us kind of the big picture overview of, are we seeing coins flowing out of custody of exchanges and into different wallets? Now, the first thing I want to highlight on the overall net position change. Now, this is the 30-day change in coin balance on exchanges. Red means that we're having more outflows than inflows, and conversely, green is more inflows than outflows. Now, what we can really see is a number of observations here. We've got this on a very big picture zoom right now. And what we can see is that from March 2020, note how it was predominantly inflows through most of Bitcoin's life. And this actually manifested, let's look at the overall balance on exchanges chart. As we're seeing all of this net inflows, that manifests as a generally growing balance on actual exchanges. And note that March 2020, that liquidity crisis, was in fact the absolute top when it comes to Bitcoin exchange balances. So we saw a change in market sentiment from that point onwards. So what we can see is that that transition from a period of net inflows to a regime which has now been sustained for a number of years of net outflows. And the current print that we had this month was about 96,000 BTC per month flowing out of exchanges. Now, this is non-trivial. You can see that we had 1-2 moments at this kind of magnitude, up in that 100,000 BTC type realm, only twice before March 2020. All of the following events, 1, 2, 3, 4, and now 5 events, have all followed that March 2020 event. So it really is a historic level of outflows. Now, remember that exchange balances are only one part of the picture. We can't take that and say, well, that means that the bull market has resumed, but it does help us set our expectations that there has been a fairly historic amount of purchasing during this last couple of weeks. And we can see that as a result, our exchange balances have been trading sideways for a long period of time, but have almost resumed that downtrend. So this is certainly a metric that I'm paying attention to. Are we going to continue this downtrend overall, this breakdown? Is it just a temporary event? Or do we actually see follow through where the market starts to actually see Bitcoin as this pristine collateral and the accumulation trends actually strengthen? So it's really a process of understanding the foundation where we are at the moment, and do we see that continue down the road? So now moving into actually trying to characterize the accumulation. Who is participating? How do we use tools that are in the Onchain tool suite to actually understand and characterize who is participating, how much are they accumulating, and all of the above. So what we have here is a bunch of tier 3 metrics. So looking at our total balance in accumulation addresses and the number of those accumulation addresses. So let's define those first. So an accumulation address is a balance that has more than one inflow in terms of BTC volume, but it has no history of outflows. So we'll often see this in things like custodians, things like MicroStrategy, or in this case, the Luna Foundation. They're using a single address where they essentially send all of their coins. It gets locked into a multi-signature, but they have no history of spending at this point in time. So as I mentioned on the left, we're looking at the balance, the total BTC volume that's held in those style of addresses. And on the right-hand side, we have the number of those addresses. And we can see that both of them have actually been on a fairly strong uptrend during the last couple of weeks. As we started to form this pricing bottom, note how we started to see an uptick in both the balance held on those exchanges and in terms of the actual addresses that were accumulating. So we know that those general overall multi-signature style or accumulation style addresses have been adding to their balance over recent weeks. And generally speaking, when we see this at lower price points, and we can kind of compare this to our URPD metric from last week, what we see is that there has been a perception of Bitcoin within that value zone through the course of this $40,000 price range. We've seen that the market has stepped in and actually accumulated a great number of coins in that realm, and we're seeing it across a number of metrics, whether it's our URPD, whether it's our supply and accumulation, or our number of accumulation addresses. So we are seeing this characteristic accumulation occurring at these levels. Now, we're also going to look here at the shrimp class. So these are people who have less than 1 BTC, and this is an entity adjusted metric. So you can see here I've got the legend item turned on all the way up to 10 BTC. Now, if a particular individual has multiple BTC, but we can determine that they're a single on-chain entity, then their cumulative balance will show up here. So people who've accumulated more than 10 BTC will have moved into the higher realm. So we're only looking at people who have less than 10. And we can see the same type of effect. We've seen this growth rate, this acceleration. Note how the curve is steeper over the last couple of weeks. We've seen that this cohort in particular has been in fairly strong accumulation for some time. It's almost a very persistent. This is that stacking sats cohort, so to speak. And we saw it slow down a little bit as we formed the topping pattern. Note how this went somewhat horizontal. We really saw a bit of a slowdown in terms of the overall accumulation by this cohort as we formed that topping pattern. So you could argue that that's a bit of a signal that we were getting a bit of a slowdown in the market. However, note that following the May sell-off, when we had that significant 50% correction, we actually had a boost. The trend started to climb again, and it's actually across all of these different bands. We started to see it climbing over time. And particularly as we've now sold down for the second time, another 50% correction, here we are at the very bottom seeing a growth rate and acceleration of the accumulation from this entire cohort. So we do know that shrimps are actually participating in this and providing a reasonable amount of strength to that trend accumulation score that we saw at the start. So we can see that they are participating, And they currently hold north of 14% of the total supply of BTC. So you can see that it is in fact a meaningful amount of coin volume. So the shrimps are participating, and we are seeing that acceleration in their accumulation behavior as this trend continues. So now we're going to look at the supply per whale. So this is now trying to take it to the other side of that equation. And we're looking at only those who have coins for between 100 and 10,000 BTC. So remember that when we're looking at things like the Lunar Foundation Guard, they have over 29,000 coins at this point in time. So they will actually have pushed beyond this category. We're limiting this to 10,000 BTC. We're going to look at those kind of very large whales shortly. But what we can see here is this is the average number of coins held per whale address. And we can see this has been at a general ascent through most of since 2018, the low. We can see this started to really climb. And we've seen that the average number of coins held by this whale cohort has been increasing. Now, note that it really stagnated, has been trading sideways. We've got a bit of volatility here as we came into the bottom, but it has since kind of corrected into this very, very sideways state. So overall, we're not seeing a great deal of new addresses nor new supply moving into this cohort. It's quite interesting that across the board at this 100 to 10,000 BTC realm, it's actually somewhat sideways. It's almost like that middle tier of sharks to whales are not quite participating to the same extent, certainly as what the shrimp are. So we're getting a bit of an image here that we've got the shrimp are participating quite heavily and quite aggressively. We've got the middle tier whales that are somewhat participating, but not particularly, nowhere near as prevalent as what we're seeing in the smaller holders. So now we're going to jump and actually characterize that fully by looking at the accumulation trend score by cohort. So this is actually where we have all of these metrics built out in terms of the 1 BTC, 1 to 10, 10 to 100, 100 to 1,000, so on and so forth. And what we can really see is that note this bottom blue bar here. This is those shrimp. This is under 1 BTC and even the up to 10 BTC above them. Note how they actually started accumulating as we formed the bottom back here in February. Their accumulation spans quite far back. They've been quite aggressive and sustained that amount of buy pressure for some time. So it's showing that we can confirm that those shrimp really are providing quite a bit of buy side support, at least relative to their balance. Now we can also see this blue zone up here in the 1,000 to 10,000 realm, and more recently in the 10,000 plus. So remember, in our supply per whale, we were looking at 100 all the way up to 10,000. But you can see that the 100 to 1,000 is somewhat red. They really haven't been participating at all. In fact, they've been in net distribution. And their distribution has been now balanced by the larger whales. These are the 10,000s plus, and more represent the ETFs, the Lunar Foundation Guards, WBTC, these larger style entities that are accumulating very, very large amounts of coins. So what we're seeing is that these particular entities have stepped in over the last 2 weeks. So whilst the shrimp have been very aggressive over that period of months, we're only seeing that those very, very large whales are now starting to accumulate during the last 2 weeks. So we're getting almost this barbell type behavior of very small and very large entities that are in net accumulation. And this is where we can really jump and try to characterize some of those much, much larger holdings. Now, this is only a subset of them, but it's a useful tool to understand where these different coins are going and just understand the macro landscape of some of these larger ETFs, WBTCs, and Lunar Foundation Guard balances. So the first one we're going to look at is our Canadian Bitcoin ETFs. And we have 1, 2, 3 of these, where the main one that's seeing most of the inflows at the moment is the Purpose Bitcoin ETF. We can see here that it has seen very strong inflows, and impressively, as price was correcting or consolidating, we saw an explosion in growth in this. It's actually showing that people had more interest in Bitcoin as the prices were falling. So again, that's a relatively healthy sign. It doesn't necessarily mean that we're out of the woods yet, but it does mean that we're seeing that growing interest on the demand side as prices fall, and people are starting to see that there might be value with these lower prices. And it's starting to set up that kind of foundational support that we would like to be seeing come in to try and put a floor in for this bear. Now, what is quite interesting is that across these other 2 ETF products, note how they've really stagnated for a number of months now. And really, this is generally a representation of different functions between how the different ETFs are structured. It could be they have different fees. It could be that the management style is not quite the same. Whatever it is, there's going to be some market preference at the moment for the Purpose Bitcoin ETF. We are seeing that this is the most liquid and the ETF that's attracting the most inflows. And if we actually combine these all into a workbench chart, we can actually see that when we combine them, we can see that as there has been a general inflow, we can see this growth in ETF interest during the actual 2021 bull, that first half of the year. We then saw it stagnate through May, June, July as we had the 50% correction. And really it was following the September dip where we started to get a bit more price appreciation. And then impressively during this correction that the overall flows into these ETFs really did start to climb. But as I mentioned, Purpose ETF is really seeing the dominant flows of these out of all three different ETFs. Now, the last two are really capturing that Bitcoin as a pristine collateral, as a preferred collateral in the market, whether it's for backing, in the case of Luna, a stable coin, an algorithmic stable coin, or in wrapped Bitcoin, where people are actually using their BTC and deploying it onto the Ethereum blockchain in DeFi applications. And we can see that the WBTC in particular has had a very, very strong couple of years. We've seen a massive growth. This is now over 1.4% of the total Bitcoin supply. 274,000 BTC are currently locked in WBTC. And since we had our lows here on the 22nd of January, we've actually seen over 12,500 BTC flowing into WBTC. So we are seeing that demand for Bitcoin as a collateral asset within the DeFi ecosystem. And again, it's kind of showing that market's preference for it as some form of semi-stable, a reliable, trustworthy collateral used without different ecosystems. So it's interesting to see Bitcoin continuing to form into this realm. And really following on from that, the Luna Foundation Guard has been adding quite aggressively to their balance. They started with around 9,500 coins back here in late January, and we've seen that they've added to their balance up to the tune of about $1.4 billion at the moment. So they've got over 30,700 coins under their custody at the moment. This has stagnated over the last couple of days, but it does remain to be seen whether they continue to follow through up to their 3 billion, and there's even been talk of up to 10 billion worth of collateral. But it's showing that Bitcoin is being seen as that pristine form to actually back the UST stablecoin as it's a backstop essentially, and it believes that the market will essentially see Bitcoin as that collateral asset to add that extra credibility to their stablecoin. So it's going to be very interesting to see how these larger holders actually behave, and we can see how we can break down the overall accumulation trends depending on which parties are all involved, using these on-chain metrics to understand where it's flowing, which size of these entities they actually are. Are they shrimp? Are they whales? Or are they in between? And try to really characterize the accumulation as it's happening. So thanks for tuning in for that session. You can see that we've had a fairly strong period of accumulation, over 96,000 BTC being absorbed out of exchanges over the last month, which is historic. We don't see that happen very often. And we've started to characterize who that actually is. And it appears that it's the shrimps and the very large whales that are accumulating in the most part. What we need to stand by and see is, do we get that continued follow through? Was this just a blip in an event? Do we actually still have to overcome some of these bear market headwinds? Or have we really seen a bit of a changing of the tide? We really need to watch for that follow through, and things to pay attention to is something like our on-chain activity. And do we see more people starting to flood into the network now that they've seen a little bit more excitement? There's a little bit more of this pristine collateral narrative coming back into the foreground. So as always, do leave us a comment for what you enjoyed in this video, and I will see you next week. Cheers.